We want to look into how gold is actually buying opportunity that it's presenting, which I feel like we can actually take advantage of it. Let me do this. Right, so let me just clear my chart for the sake of clarity. Let me just clear this chart. Right, so this is gold, and I think those that were here yesterday on the evening session, I think we covered so much ground in terms of showing you guys the selling opportunities that it has been printing out, of which that was very, very easy moves that were happening there. So our analysis is still almost the same, whereby we still have a projection whereby we are anticipating price to drop all the way to this demand, which is this daily demand. We have that break of structure here. So we are still having that demand as our major target so far for sales. So this still remains our target for sales. Up here, you can see that these candles, they've already started to print out a bearish structure right there. So currently, if we are going to have a pullback, we now need to know to what extent can those pullback go. The first level that I have is this one, and the second one is this one. So the market can come and touch around those levels, then drop, or touch even there, then still close below this line here. So these are some of the TPs that I have for the buys that are going to take, this one and this one. Then if it exceeds that, then we'll look at that one. But so far, my first major two TPs that we're looking at for the buys is this one and this one. So if you go lower to lower time frames, you will then now see why we are having that all buy. So looking at the H4 now, you can see that here there's a supply zone of which they can come and touch there, then still close below these lines. Because these lines or these levels, they are basically daily levels. So if it's a daily level, it's a level that would take even 24 hours for you to fully confirm now whether the market would have closed below it or whatsoever. So they can push all the way to there, then still close below these lines according to the daily. So if you scroll down to 1 hour, I mean, you can see clearly that those initial sales that I was illustrating yesterday were basically the initial sales that led to this change of character. In the mentorship class, that those initial sales, we actually call them the liquidity generating uh move, basically, which is a move that the market does before it changes character. So that move, it can actually be a form of liquidity generation, in the sense that coming down, obviously there will be trend lines and so or whatsoever. So trend line liquidity there will be wiped by the time this market decides to do that pullback, and even some equal highs, if there are any equal highs on any level, they can actually decide to wipe those out as well. So this is what we currently have. They've changed character on the 1 hour. We now need a pullback and a continuation down, right? Pullback, then we continue all the way down up until we get into this demand that we have on the daily. So looking inside here, even if we put a Fibonacci from the top to the bottom, just to see some of these levels visibly, we can see that here we have quite a number of Fibonacci zones, of which here there's 78.6, 50%, blah, 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 and blah, blah. So let's go down lower again. Let's see if we can identify other zones where price can still push to. I'm seeing a very beautiful level, even whilst we're still on the H1. I'm seeing other levels. For example, I'm seeing this level here. Price can come there. Um, so zones are just zones which you can just draw. But at the end of the day, after drawing zones, your ability now to study or to monitor what we call the shifting of price is now a skill that you now must have. So I just have these two major zones. If they still push further deep into this zone, it's also still fine. But so this is what I have. Then if you go to M5, I believe structure makes more sense there, right? So we just leave the Fibonacci levels like that to guide us also even whilst we are entering or whilst we are in the buys. So where did the buys begin? That's the first most important question. Where did the buys begin? Because here, internally, you can now see that the M5 will now have changed character to the upside to facilitate the pullback. Because to facilitate the pullback, they have to give you a counter trend, which is opposite the main trend. So in this case, this is where they overly changed internal structure or changed internal character according to the lower time frame, according to the M5, like that, to facilitate, to facilitate the pullback. So this is what I have on M5. Right. So even before they went to change this character, personally, I remember I jumped into these buys around these levels here, because even here you can see how they actually started to print out bullish market structure. Let me just hide this so that we right. If you look at structure here, they were coming down nicely, right? I think I explained those cells whatsoever. So here, this is the H1 change of character, which is here. So they now have to pull back, which means they now have to change this internal whole bearish market structure. So here now you can actually see even before they changed this character here, you would have even started buying before that. How? If you look at this push here, they went up, came down. This move, there are so many case scenarios where you can even start buying. For example, in this case, they could have actually came down and broken here and given you a simple change there, maybe something like this, right? That's a common scenario. Then there's this scenario where they drop down, come up, create this leg, they shift down, they don't break that structure. Then they come actually and break this one. So they're now breaking a level or breaking a structure that they have not been breaking all the way as they were coming down. So here, this was actually the first signs of a bullish market. And then they actually drop down. They don't take out the low. They take out the high. They don't take out the low. That was a clear sign for you to even start buying there. So right here, that was the first sign. Then obviously they did a pullback. They did a pullback to this zone, to this demand. Upon that pullback there, you just needed a simple confirmation that you needed there was the shifting of the candles, of which is something that I think I've been telling you guys for a very long time now. Whether you're in the military class or you're not, still the idea of the shifting of candles is something that we've been talking about. So yeah, that candle's low was broken here. We now had this other candle, this high, this low, its low was also broken there. Then eventually this is where the shift happened. So there, upon that shift, you would have even bought up there. Stop loss just slightly below this region. Even if you entered upon this pullback, still both of those entries are correct. That buy or this one down here, both of those were valid. So that was the first entry for buys. The other entry for buys, it actually came even after this pullback that they did there, which I think I'm going to explain just now. So that was the first entry like that. The next entry came just here. They did a pullback there. And that pullback, all you needed to do now was to enter upon the upside shift. So in this case now, the upside shift, if you're going to wait for it, you could have waited for this whole candle. Of which, even if let's say you had entered right here, according to M5. Your stop loss in this case, obviously, it has to be around here. But now, if you go to lower time frames like your 2 minute, your 1 minute, you can even see that you could have entered that next set of buys around here. After that confirmation, even if you had entered here, that was still also okay. Stop loss here, like this. Then we go all the way to the upside. We go all the way to the upside, and throughout the entire going up to the upside, all these trades, the beauty about the way we look at the markets now is most of these things, like, you have that liberty to even maximize, and not only maximize but even protect even the profits that you've been. For example, this trade and this trade, after entering like that, if you follow through on price action here, before they even changed that whole character there, they kept respecting our buying ranges throughout the entire time. The only time that they broke your buying range in this case was up there. Personally, after entering, obviously, I think I slept off. I entered around there, but I slept off. Then I had to close around here, of which I was supposed to close immediately after this buying range was broken. That was when I was supposed to come out. Then you wait for a pullback. Then we anticipate a continuation to the upside. So now, what do we need now? Now we need something like it it's still dropping, as you can see. And if you notice here, the confirmation to buy obviously is the breaking of our selling range. These are selling ranges that the market is creating to the downside. So if it, for example, let's say it closes above here, obviously we'll jump into buys. So now in this case, we just now need to see how far can it still go to the downside. Currently, it's at 38.2 Fibonacci. And looking at price action, you can see that there's this zone here where price left impulsively. So this level here where price left off impulsively, it's a level where we where it can actually drop all the way back into. So here they can still push deeper into this, then they shift from there. From there, once they shift, we'll catch nice buys from there. If they shift there, we'll catch nice buys from there all the way to negative 27. From negative 27, the next target is negative 61.8. So this is the current trade that I think everyone can even take today. You can even maximize on this trade setup. Just wait for price to give you that shift before you jump. If they give us a shift before they tap there, it's also still okay. We'll still enter the buys because they would have given us the shift. But personally, I'm anticipating price to come into this region before they go all the way up. So this is a beautiful buying opportunity that I'm seeing on gold currently. It looks like a very, very, very beautiful buying opportunity. So I hope everything is clear on that one. Opportunities like this, where we'll come and discuss them fully, how you are supposed to enter, what to wait for. These are opportunities to maximize on, especially once everything that would have spoken happens accordingly. You don't even need to wait necessarily for a signal. The idea of signals is something that slowly but surely it can even cripple you, in the sense that you will be having that mindset whereby you are always waiting for the the go ahead to now jump into positions or whatsoever. So that whole thing of waiting for the go ahead is what will keep. So I think that whole explanation for the how you're going to enter those buys is clear. So now going to the subject of the day, where I said I'm going to show you how strategies are basically interconnected. I feel like for the 5 years now that I've been in the game, I can boldly tell you that I think I've seen it all. I've tested it all. I've almost attempted most, if not all, the ways of looking at the markets that are there currently in trading. And of all of them, I can tell you the difference between all of them. I can tell you the similarities. I can tell you the where the difference factor is. You still find there are points that I need you to keep in mind, right, when it comes to this whole strategy topic. Because at the end of the day, if you don't have someone like me or anyone else who will come to give you clarity in terms of, so in an industry like this where you have people trading different strategies, what do I then do? I'm a beginner or whatever. Even if I'm not, even if you're not a beginner, what then do? Which approach do I use? So at the end of the day, you need someone to bring that clarity to you. So this is what we're going to be doing today. This morning, I think even in the evening again, we'll also clarify the same thing as well. So just a few points to take note of when it comes to the whole strategy thing. When it comes to strategies, you need to understand number one, what is the whole purpose of these strategies? The entire purpose is for us to know when to buy and when to sell. Number two is for us to accurately or precisely enter into the market correctly or at the correct zone or the correct level, and also exit precisely or accurately. So, having said that as well, you also need to know that there are people that are trading using moving averages, and moving averages are alone, right? Or even moving averages combined with the structure whatsoever, and they are making money. Then you find someone else who might not even be using moving averages, still making money as well. Then you find someone else using trend lines, still making money as well. Then you find out someone else who is not even using either the indicators or the trend lines, still making money as well. So at the end of the day, if you're not careful, especially to seek understanding. So I remember, was it 3 or 4 years ago, where I had a confusion myself, which was, it's not really not a negative confusion, but a positive confusion where, okay, so what, which is which now? Which is which? We have seen this with, I personally even had friends or still even have friends who might not even be using the approach that I use, but are still making money. So at the end of the day, there has to be someone like myself who comes now to bring clarity to this thing, to this matter, so that you know what is what, which is which, what is the difference in these strategies. Why is it that someone who is using a certain approach different to someone's approach, these both of them, they are still making money? They can't both make money unless there is a similarity to to how they are looking at price. They might look at it using different tools, but still the decision that they make after that whole analysis process, they are almost making the same decisions. So the first major point when it comes to the difference in strategies is strategies differ in terms of how precise now. How precise is the strategy in terms of uh, how early are we going to enter opportunities? How early or how late are we going to enter? For example, okay, let me just give a practical example here. For example, let's see a trend line trader, for example, in this scenario here, they could have maybe plotted something like this. Okay. They could have even maybe plotted also something like this. Is this wrong? No, it's not wrong. So He could have drawn something like this. Then by the time the market comes outside there, he buys stop loss below this whole thing. Then boom, the market moves accordingly. So you need to understand now that at what point do trend lines work, and at what point do also trend lines don't work? Because most now of these strategies, I think I can tell you this openly now. If you get this, you get this. If you don't get this, I don't know. Most of the strategies currently that have been publicized are strategies formulated from secondary confluences. If you get this point, the confusion that you might have had, whereby you see people even still quarreling. Sometimes people, they can be so much immature in this industry, where someone can actually publicly quarrel. Say, that strategy is dumb. That one is foolish. That one is. All those things or all those statements are statements that arise due to the ego, where if you have been, let's say, you have been a trend line trader for 5, 10 years or whatsoever, and based on how you have been performing, your results have been so good. And now when I come and I say I have something better, or I have a better approach besides that one, without you even looking into the facts of why I'm saying it's a better approach, the ego there can make you to feel as if your way of looking at the markets is dull or it's damp, depending on how you want to look at it. So most of the statements, be careful next time when you're going to listen to any podcast on trading, next time before you listen to anything concerning trading, be wise enough, be smart enough to look into the facts in yourself of these matters. There are people who come publicly and say, this strategy whatsoever is dumb. This one is. But when you look into the details, you definitely see that that way of looking at the markets, it's more precise. Not to say that's the only way, but compared to other ways, it will be a more accurate way. So when it comes to trend lines, what I have noticed for years now, I remember even those that are in the mentorship class, I believe we did them very good justice in us almost giving them all the strategies. If you join our mentorship class, you'll be shocked to find that all the strategies that you ever see, they are there inside there. Not to say it's a sign of confusion, no, but we try to come from the secondary confluences up until we get to the primary confluence. From the secondary confluence perspective, this is where you are using secondary confluences, things that will be respected as a result of the market having respected something else first. There are tools or things or strategies that will be respected after a certain strategy or after a certain confirmation would have confirmed, which is what we call the primary confluence. For over, I think, a year or so now, in the mentorship class, the main subject has been us solidifying the understanding of the main primary confluence, which is moving price. It's not necessarily the market didn't go up because of the trend line being broken. No. The trend line was broken because the market was now going up. So we need to realize that what is this other confirmation that can show us that this market was now going up? It's the candles. It's the candles themselves. The candles, they can speak. I've always said these candles have a language. They can talk. If you familiarize yourself, if you spend enough good time with these candles, you begin to understand their language. You begin to know When we are going up, how do we behave? When we are going down, how do we behave? Once you get to the understanding of candles themselves, all these other names that people they are now coming up with, whatsoever, elephant strategy, what strategy, lion, all these funny names that people are coming up with, it's just a necessary exaggeration, unnecessary exaggeration of the way in which price is moving. Price is just moving according to the candles. If you can observe and study the candles, I remember these other webinars in the mentorship class where the task would just be to clear your chart and look at the candles. When the market was going up, what was happening to the candles from a higher time frame perspective as well as from a lower time frame perspective? This is the real. So I'm going to expand in the evening on this same subject. I'm going to expand more on this same subject where I'll show you so many ways in which even a trend line trader was maximizing even on this drop. This drop, or even so many other opportunities. I'll show you how most trend line traders in this case, especially the ones who have mastered the trend lines, right? I'm not talking about a general trend line trader, someone who is still yet to master. No, I'm talking about the real G's. They were just scaling in or entering upon the counter break, the counter break, the counter break like that. The counter break, the counter break, the counter break. So in this case, there was no counter break. They have this, but there was no counter break there. Had this broken here, potentially, mostly, they were even going to sell. So we are going to expand more in the evening on this subject. It's something that is so interesting, something that I believe it will help you to trade with now a mind that understands now what is going on the markets. Even if someone comes tomorrow and said, I have a bulldozer strategy, you're not going to be shaken. Those are just names that people are coming up with. The markets themselves, the candles themselves, they can speak. They can speak. When they are going up, they can speak and tell you now we are going up. When they're going down, they will tell you now we are going down. Study the candles. Study the candles. Study the candles. Forget about all these other tools. Study the candles. Study the candles from an individual perspective as well as from a collective perspective. How are they moving? Study the candles. So for this morning, I'm going to stop here. I'll expand more in the evening. In the evening session, we'll expand more on this same subject as I'll be showing you other so many examples concerning the same subject of strategies. So we are done.